Hello dear friends, welcome. I am Ajitkumar PM. In this video, we are going to discuss about RBI's role in energy transition. Yes, you heard it right. Energy transition recently been one of the buzzword in the green market. You may be wondering what is this energy transition? So energy transition, simply put, the energy transition means moving from traditional fossil fuel based energy production to new and renewable based energy production. Fossil fuel based energy production, here we can see based on coal, diesel or petroleum products or natural gas. From that to a cleaner energy or renewable energy like solar energy, wind energy, so which are clean energy sources. So at the same time, they are also renewable energy sources. Okay, so this energy transition or the transition from a fossil fuel based energy production to solar or wind or renewable or new, so non-conventional energy sources. This transition is called as energy transition. Now, do you think energy transition is at this point of time is need of the hour? Yes. Why it is need of the hour? Because of climate change risks. So you may be heard about the assessment report 6 of IPCC, International Panel on Intergovernmental Panel on Climate Change. So in that also we have seen the climate change, so which is true to the nature. The climate change is happening right now. If we don't act right now, it will be a disaster in the future. So because of that, we have seen the climate change risks or the associated adaptation or mitigation strategies are the current market's trend or the buzzwords. So the energy transition, yes, exactly at this point of time, it is the need of the hour because the climate change is ticking. We need to cut down our carbon footprint, or in other words, we can say it as we need to achieve our decarbonization goal. So why RBI is encouraging energy transition? Because this climate change risks are also associated with the financial system and the sustainability of economy. So that's why RBI is trying to encourage energy transition. Now, what are the RBI steps to encourage energy transition? So RBI is trying to encourage energy transition by some of these steps. So one is it is trying to extend priority sector lending for renewable energy sources, or they may also call it as green energy. So we know that priority sector lending, that means whenever a bank is going to lend some amount, so lending in the sense, or it is also called as granting advances, or we can also call it as lending, or it can also be called as loan. Okay, so here bank is going to give some loan to the public or the market. In this lending process, banks need to give these particular loan to some priority sectors. In this priority sectors, we can see agriculture, micro, small and medium enterprises. So similarly, we can also see renewable energy. So here the RBI is trying to extend the priority sector lending to renewable energy, as, or you can also call it as green energy or green initiative sectors. At the same time, RBI is also planning to give low cost fund to banks so that banks can lend this money to the renewable energy sector. At the same time, RBI is also trying to accept sovereign green bonds as collateral. So what is the meaning of green bonds? Green bonds are those bonds from issuing these kind of bonds, whatever the money is collected, that collected money will be used for the sustainable initiatives or green initiatives. Okay, so those kind of bonds are called as green bonds. when it is issued by the nation, that means in this case India, then it will be called as sovereign green bonds. Sovereign green bonds. Now RBI is saying that whatever these sovereign green bonds we have, we can keep it as collateral, and by this collateral we can also get some money, that is from loan or credit window. So what is the impact of this particular step? Sovereign green bonds. Normally, whenever we take sovereign green bonds, we have given money, or whenever we have taken green bonds, we have given money. So this money will be invested in green initiatives or renewable related initiatives, or you can also say it as sustainable initiative, so that the environmental pollution can be cut down, or so carbon emission can be cut down. So that is the importance of this particular sovereign green bonds. So whenever this can be used as a collateral, so we will think of buying more and more sovereign green bonds, that is encouraging so the sustainable initiatives related investments. Similarly, RBI is also planning to give more flexibilities in marginal requirements. So what is the meaning of marginal requirements? Marginal requirement means whenever there is an bank which gets its deposits from different kind of deposit accounts, like you may call it as savings account, current account, fixed deposit, recurring deposit, or banks can also get some money, so our funds from the different kind of loan windows from RBI or other banks. Now, whatever the deposits, total deposits or net deposits, normally called as NDTL, net demand and time liability, a part of this NDTL should to be kept as a reserve requirements. So it should be kept as a reserve requirements. So it is one kind, reserve requirements. What is the meaning of reserve requirements? Whatever the total deposit or NDTL a bank has, it should keep certain amount as reserve requirement. In that we can also see CRR, that is cash reserve ratio, as well as SLR, statutory liquidity ratio. So apart from that, whenever the bank is going to lend, so it takes some collateral. Now, suppose consider, so this collateral has a value of 2 lakh rupees. Now, the bank, so whenever you try to give a collateral of 2 lakh rupees and take some credit from a bank, normally what you observe is that bank will lend you a amount which is less than 2 lakh. Suppose think that in this case 1.5 lakh. The remaining 0.5 lakh or 50,000 rupees, that we will consider as marginal requirement, which cannot be given in the form of lending. Okay, whatever the value of collateral, so whatever the loan amount we are giving, in that what is the difference between these two? That is, collateral value will be higher, lending amount will be lower. So difference between the collateral's value and the lending amount, that will be called as marginal requirement. When RBI is talking about more flexibility in marginal requirements related to renewable energy, that means they are going to lower the marginal requirements for renewable energy related sectors. So what it will be, what the impact of this particular step will be, that is, so whenever we try to give a collateral in the form of renewable energy sources, or it may be a green bond, okay, in those situations we will get more money in the form of credit. The marginal requirement is less, that means you will get more money in the form of credit. So that is the meaning of more flexibility in the marginal requirement. So, and RBI is also proposing, and these three are already done. So RBI is already done these particular first 3 points or first 3 steps. So next, some of the proposals underway. So some of the proposals in pipeline. So one is adjusting reserve requirements. That is, already we have seen what is the meaning of reserve requirements. In this we have CRR and SLR. Majorly RBI is concerning or focusing about SLR, that is statutory liquidity ratio. By altering statutory liquidity ratio, how we can to move our lending amount or move our amount to, so that is the money supply to renewable energy sectors. So that is one proposal. Similarly, another proposal is related to prudential regulations as per the Basel III norms. So Basel III norms is the norm which have been given to international banking. So in this, the banks, whatever the banks risk associated with their credit operations, that will be addressed through some of the capital requirements associated with these particular norms. Normally, we call it as capital adequacy ratio or capital to risk asset ratio, CAR or CRAR. In Basel III, so Basel III guidelines, we have one particular buffer for capital conservation, that is called as capital conservation buffer. Whenever the bank is bankrupt or it is having an liquidation or the insolvency related issue, so in those situations, these capital can be used. That is the capital in capital conservation buffer. At the same time, another buffer, so the proposed buffer or the fund, that is counter cyclical capital buffer. Normally, what happens whenever there is a counter cyclical, counter cyclical here, cycle means business cycle. Whenever there is a business cycle or the counter business cyclical policies, normally when we see in a case of recession or depression, so in those situations, normally the banks will also occur losses. In order to maintain the banking operations, they need certain capital buffer at that particular point of time. So that will be given by counter cyclical capital buffer. Even so, apart from these two buffers, RBI is now proposing a buffer which is exactly or which is specifically required for climate change related risk associated. Okay, climate change related risks. So these particular buffer, capital buffer, is also required for banks. That is a proposal given by RBI as of now. At the same time, RBI is also trying to ease external commercial borrowing. External commercial borrowing in the sense, so from the foreign institutions or foreign governments or multilateral organizations, whatever the credit we can take. So being within a economy that is within India, if we able to take credit from certain other foreign institutions or foreign governments or multilateral organizations, so that will be called as external commercial borrowing. As of now, we have a external commercial borrowing cap of $750 million. Again, it is not just dollars; it is million. $750 million cap. So above this, we cannot have external commercial borrowing. So there is a cap which is given by RBI. So now, if RBI is trying to ease external commercial borrowing, then what RBI should do is that it should increase this particular cap, $750 million cap to, so it should increase to certain higher amount. So that is what the meaning of ease of external commercial borrowing. So this is what RBI is proposing. Last 3 points, these 3 points are actually RBI is proposing. Okay, so RBI is proposing. First 3 are already, so they have been enacted. So that is how RBI is trying to encourage energy transition as of now. Okay, so thank you for listening. So I have a question for you, that is a mains practice question for you. So based on this particular topic, that is, do you think India will meet its future energy needs from renewable energy? Justify your answer. What measures are being taken by RBI to promote energy transition to a sustainable and equitable economy? Try to answer that. Tune in for the further updates or further videos from our side. Thank you for joining. So see you in the next video.